Okay, hello folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy at TradeStation Group. It's great to be with everyone. We do these webinars every Thursday afternoon at 2 p.m. to show you some of the things you can do at TradeStation and some of the things happening in the market overall. So it's great to be with everyone. Just showing you some quick disclosures. I'm also going to share some disclosures in the chat, some other information that might be of use to you guys. Hope everyone is doing well. Make sure it looks like everything is good with my sound and everything. And I am just going to move ahead with this. Now, interesting rebound in the market today. I'm going to, uh, as usual, be using a blog post on tradestation.com, which has a lot of information in it. If you guys want to go over there, and there's a new zip file this week. We have not updated the zip file for a while. And now we're doing it this week. We have a new, some new information for you guys. We've been sharing some new indicators recently in different places. So go to tradestation.com, go to Insights, and then this article right here, how long will the volatility last? That's what we're talking about today. Um, Also, I'll point your attention at this article right here and this article right here with the skateboard on it. So first of all, how long will the volatility last? At the top here, we have a new zip file. And when you go into the zip file, you will see this folder called MT Public Materials. You go into that, there's a series of these ELD files, which are basically um, the ones that say ELD at the end, if you see them like that. And basically, these include a series of indicators that you can import to TradeStation, and then you can run the workspaces. And as usual, we're working with the workspaces. So these are the main things we want to share with you today. There's a new one. We've not done one in a while. And then we are working with the MT main workspace. Right here, we have a new MT main August 2024. I just added a couple of columns to some of the sheets, no huge changes. Um, so go ahead if you want to take a look at the standardized returns. And I want to just mention, you take a step back and look at the the environment we have now. I mean, I think we have to realize the market overall. We have today jobless claims were better than feared. And you take a step back and you kind of say, all right, what if we don't have a recession here? What if the Fed is going to cut in September as the market is expecting? And then the S&P has pulled back. It had a if I did my math correctly, the pullback was 9.7% in the overall S&P from peak to trough on Monday. So that's pretty close to being a correction. So when you're in a spot where the market was in a pretty strong uptrend, there's a lot of optimism about things like the Fed cutting rates. And, there's a lot of superlatives we've said about, different things. But in some ways, this market is in a situation where the conditions are potentially the most bullish since 1995. And we've shown that with things like the 9-day rate of change, Wilder's RSI, things like that have been consistent. The very tight pullbacks that we've seen, the tight sideways movement in the market without steep pullbacks, the fact that there's been record amounts of cash on the sidelines, these sorts of things that suggest that the market is not over-owned and that money is still entering it. So let's take a look at some other indicators now. But I want to just mention that when you have a pullback of that nature, of this steepness. So I'm going to just quickly, these little workspace, a few little things I was working on here. This is essentially the workspace we have in today's blog. But I wanted to mention here, this actually is historical volatility. This is a pretty incredible sort of surge in historical volatility. But if you look at this here now, I think there's two things in particular I wanted to point out. There's a level right here, right around 51.20 that we talk about in the blog post today. Basically these two levels, 51.20 and 51.92. This level, you cannot see it very clearly on the daily chart, but it was basically a weekly close back in here somewhere. I think it was this week. This is a Friday right here on the 8th. That was a weekly close. It's interesting because if you look back after the market pulled back in April, at the end of April, that was also pretty much the high. And now we come down to hold that on Monday. Now, after that, the level that I had been citing, and if you look at this blog post here with the bear in it, we talked about this level, which is, wait a second, it was a different blog. I'm sorry. It was this article, this chart here, but it was the low from late March. So on our market, state of the market on Monday, we had kind of talked about, on Monday afternoon, we did another webinar and we talked about the fact that this was the level also that people might be looking to. Now, isn't it interesting that basically where did we close yesterday? Very close to that level. So there's a few other things about it. First of all, it's really close to 5,200. So just people who aren't even looking at history, but just looking at nice round numbers that you can say, wow, 5,200 or whatever. Well, we got 5,200. We have the low from late May. Those two things together. So we basically have a support level from mid. There's a weekly close from mid March that then became resistance in late April. So that has, that 51, kind of 5120. And then we have 5200, which is psychological. We have 5192, which was that weekly, which was the low in late May. So these things together suggest here we can now start to think that there might be some support that's kind of taking shape here. And I think it's important to realize that. So that's one of the first things I want to mention. All right, so the 10-day historical volatility reached the highest level since October of 2022. So this actually got even higher. So this is the historical volatility, which, I mean, it just kind of shows that the market has been moving very sharply. It has moved at least 1% every day except yesterday, for the last, I think, last 6 sessions. So we're just seeing here just huge swings overall. And, this is August. These sort of things happen in August. There's been a lot of people talking about things like the dollar yen and all that stuff. And I think you got to realize that things like this are weird, freakish things that happen occasionally in the market. These sort of things just happen from time to time. And, August is a good time for them. From my view, I often look at things simply based on catalysts and in terms of events. And I think it's important to realize that this period of time right here has been devoid of important news, but that's not going to remain the case. So the thing is, as we get away from the news flow that can kind of give people a sense of, kind of knowing what's going on, we're going to be exiting this kind of vacuum of news. And I'm going to get to that. I think the key thing to realize is this volatility has happened in that vacuum. And now, there's still no sign. I mean, when you look at today's movement, the volatility is not really, diminishing. But the key thing is that, we are holding this support level in the support zone. And I think he's got to remember that there's a lot of arguments here where people were, seeing positive things in stocks. And the only thing you can really say here is that the yen has had a freakish move. I mean, that's like the main argument people have against the market here. So I think you got to just, put that in context. For example, we were told there was going to be a recession, but now look at Atlanta Fed. Atlanta Fed shows, right now the current quarter is tracking close to 3% GDP growth. Now, again, economists looking around 2%. Today, jobless claims better than feared. And I'm going to get to this, but pretty soon we're going to get retail sales, things like that start coming into focus. And then suddenly, are we in recession? And this whole narrative of whatever can just go right back out the window. Another thing that's interesting here is this is the high yield spread, and basically this is junk bond spreads had a huge pop. Now, I mean, the thing is this is not 2008. This is not COVID. This is basically a weird squeeze in the yen. Again, these in August, people could look back at things like this, and the question is this really indicative of anything? It's not like Enron just went bankrupt or something. What is there here? I mean, it's a freakish summer event, and I think that's what people are kind of going to start to see. And the question now is, do people start to kind of see that we've simply had a freakish event, and then things kind of come back more into focus? I think that's really the question. And as they move away potentially from the idea of there being this volatility, recession risk, and all that, they suddenly say, wait a second, we're going to start getting back to real news, and then we're going to start getting toward a potential rate cut, and all those other things start to kind of come into focus. We'll be moving, away from this seasonal period of weakness. So I think that those are some of the things here we have to remember. Now, let me just kind of go back over here and show some other points. All right, so I mentioned the fact we have a new zip file. Also in here, in this article, we have this illustration. This is something we've used from time to time, this idea of the volatility cycle. You might want to check this out. But this is basically something that shows that, the market, essentially, you can always kind of think about it as going through these sort of cycles of volatility and calm, of correlation and stock picking, And it's like everything else. Many other things in life. You get successful and you get complacent and you get lazy and you get stupid and then you make mistakes and then you blow up and then you get disciplined and then you kind of focus, then you come back, and that's essentially what the market does. It gets to the spot when essentially everyone thinks that the market only goes up. You always make money. They get complacent, they get stupid, the market pulls back, then everyone is terrified, and then basically it comes, as it rallies back during moments of fear, everything correlates and trades together. And that's true on the way down. And the initial stages of the rebound, you also have a high volatility where, boom, the moves back up are big, 1-2% a session. But then you get to the point when the moves get smaller and then individual stocks start to outperform. So the thing is, we're in, one of two spots here. We are now kind of in the period where we're still going down and we have high volatility, or we could be in a period where the beginning of a recovery, but we still have high volatility. So the basic takeaway for a lot of these things is that essentially, this is a time when the big indexes can make more sense to focus on the big indexes and less on the individual stocks. So this is just something I wanted to mention because it's been highly volatile. This is a kind of framework that we've developed and we've talked about at different times. I wanted to share. We actually have a little illustration of it, right here. All right. So some of the big things I think are interesting. We mentioned these levels here. And it's also interesting that the different oscillators. I don't have them on this chart, but we're at a point now where we had worked off really a significant overbought kind of condition. Um, and what's also interesting now is that we're still in the fourth negative week. Well, the market hasn't gone down 4 weeks in a row since September. So I mean that might also be a spot where people say, do we continue to make new lows, or do we continue to have negative, downside for a fifth week, or is next week maybe something where things could turn? Now let's take a look down at the calendar here because I think it's important to realize, and I have some things I want to talk about even beyond what's on here. So these are things right here. PPI, kind of important. CPI has been important. And I think these here are important next week. But then after that, what do we have? We basically have, I didn't add it. Retail sales are also on the 15th. Housing starts are on the 16th. So here we have mortgage rates coming down. Very often the home builders and stuff move around those events. I'm just kind of saying it's interesting. The 16th, we have housing starts building permits. Then after that, we're going to have Jerome Powell at Jackson Hole on August 22nd to 24th. Now, he has normally spoken on Fridays. They have not yet issued the schedule. They've normally spoken on Friday. And if he does normally the last several years. If that is the case, it would be August 23rd. So the question is he going to come out and say they're going to hike rates? Is he going to come out, or is he going to basically be echoing some of the things we've heard recently, which have been far more dovish? Even people, you look at someone like Mary Daly, 2 months ago she was hawkish, now she's dovish. So I just think it's interesting to just kind of get back and focus and realize that as we move past this period of time, that forward calendar of events, based on recent history, it might not sustain the bearish sort of narrative that we've had so far. So that's one of the things I'm going to mention. All right, now, like I also mentioned, like volatility is not the same thing as a recession. And like I said, when you look at some of these different data points, like today's claims and things like that, not a recession. Um, Now, some other things that were interesting. This is the daily chart. I'm going to look here at the intraday because some interesting things on the short-term intraday chart. Make sure everything's okay. Seems like my sound is probably good. I always get slightly worried about my sound whenever I'm doing these, but it looks like we're in good shape. All right, let's look now at the intraday chart. First of all, this is the S&P, and so basically, you can see we have kind of this trend line falling, but also on the daily chart, we today have an inside day. So again, that's another sign of things kind of calming. After periods of drops, a bullish inside day is a potential signal for continuation of a longer term uptrend. So the thing is, right now, the inside day, let's actually, sorry, how did I make that come? I made, all right, sorry. This here is basically an inside day. Um, if you look, our low, we're still under yesterday's high. So it's interesting that that is an inside day. Now, if we look over on the daily, on the intraday chart, the thing I wanted to show you here is let's do the Fibonacci. Let's look at the Fibonacci retracements because this has been working once again. When you see something move and pull back, it can be interesting to do a quick Fibonacci retracement on. So we go to drawing, we go to Fibonacci, um, Fibonacci price retracement lines. Let's look if we go from our very low on Monday to our high, right? That one did not hold 50% on this. Wait, no, let me take it down more. You'll see it was a little bit less. Um, it pulled back a little more than, well, it basically closed right at 50%. Then if we go the next cycle up, we basically go, I'm trying to actually remember how this was, but the key point is a lot of these moves basically held 50% retracements. I'm sorry, I'm trying to remember how I drew them all. But the thing is, if you look, for example, a lot of these different moves, see the 50% retracement was pretty much right around here, and then it continued. The thing is when you start to see a move, 50% retracement, hold, move, 50% retracement, hold, it starts to tell you that the trend is actually turning a certain way. I've often found that as a way to validate a trend. And, I was looking at it with some different symbols. It's not showing up as clearly as I would have liked, but there was multiple 50% retracements coming off lows. If you look at things like the Russell, you look at things like the NASDAQ, so I think that that's just an interesting thing just to kind of realize here is that we did see some of those patterns. But the other thing here that really jumped out to me was the fact that we had this falling trend line today that we basically broke above, and now we have this was Friday's. With this right here is basically Friday, so it's interesting. Right now, we're trying to fight our way back to being positive on the week. So all these are things here. I think we just kind of realize is that this is now showing a certain amount of kind of stabilization, and at the same time that we can look into the future and see that the calendar is going to have these, different potential events. Now, I also want to mention that the American Association of Individual Investors came out with their weekly survey, and it was the most bearish in a while. If you look at it was the bearish reading of 37.5% was the most bearish since November, and the bullish reading of 40.5% was the lowest since early June. So that's kind of interesting. S&P put out a note saying that we had record put buying on Monday. So I think all these are kind of important to realize that these are all kind of interesting sort of signs of having, a certain, crescendo of fear. Now, another chart that I work with, and you guys, this is not in the zip file, but I use this from time to time, and you guys can create something very similar yourself, is basically these are the four major indexes. Basically, these are all futures with 4-hour bars. If you want to know how to do that, if you're looking at a price chart, if you go to something like hourly bars on any price chart, and then you just type in 240, it will then go to 240 minutes, which is 4 hours, and it will then create these 4-hour bars. And I find this useful because it gives you a degree of it just allows you to see levels, and it allows you to see things that are kind of interesting. But what's interesting here is basically you can see how we had that level. Now this is the futures on the S&P, remember, but you can see 5200 essentially. Now remember, this is the future, so the prices are slightly different, but basically it held that level, and I think this is kind of the sort of thing that you can see when things just slam down and hold levels. Those are, again, signs that the selling is not dominating. The selling is limited in terms of its ability to move price, and there are actually more buyers potentially than sellers. And I think that that is one of the things we're seeing here. Now, I think it's also interesting to kind of notice, and I look at this just off the bat, is that, um, you know, I have found that price action, and look at the Russell. The Russell is not making a high. The Dow is trying to, the NASDAQ is trying to. So I think one of the big existential questions that we now face, August 8th, 2024, we saw this big move in the Russell recently. are we in this new rotation to the Russell and small caps? Is that the new thing? It could be, but the thing is, um, I often find that charts like this can give you some of those sort of signals. And it's interesting that if you look at the way that the Nasdaq really started kind of crumbling here, and it basically lagged even as things like the Russell were trying to break out. The Russell had these short-term signals and it continued higher. The Nasdaq back here had short-term signals and it continued lower. The thing is, if you look at this now, if you get some short-term signals, you can actually see that the Nasdaq is trying to clear its highs from yesterday. The Russell is not. The Dow, these other ones. So, this could be a signal here that this fit of small cap strength that we saw has is not going to be remain in effect. And one of the big principles that we have, if you actually look over on our volatility cycle, is the idea that when the market rebounds, the big ordinary thing is the thing that can often lead to the upside. Looking for those niche, eccentric things like the Russell or biotechs or something to rally on the way back up when we've had a pullback. That's not often how it works. Often what you see it's the largest cap things because people they're on the sidelines. They say, boom, I want to just put a ton of money to work. It just goes into the biggest indexes. It goes into the biggest names. Very simple sort of thing. And so I think it's also important to realize here that it would make sense that on the rebound, that the things to lead would be the biggest, not necessarily the things that led on the way up or down or anything like that. Just that on the way up, the biggest things are generally kind of what you see. That's one of the principles of the volatility cycle is that on the way down and on the way up, the crash and the first stages of the rebound are correlated and they're index based. And as the market recovers and volatility starts to drop, that's when the small stuff can kind of get traction. All right. So I also want to remind people that NVIDIA reports earnings. Go to MT Main. Remember, this thing has an earnings calendar built in. If you go to futures, I'm sorry, go to MT Main August 2024 and go to my earnings date tab. I could put in NVIDIA and Walmart and see some of the upcoming names, Cisco, Applied Materials, they report. You can see that here. But I think it's important to remember NVIDIA here on the 28th. Now, there's a news reports about how the Blackwell chip has been delayed. But at the same time, it's still something that people see out there as a catalyst. We have the potential for the iPhone with AI in September. The date is not set, but it is out there as something. So these are also big and mega stories. Another thing I want to mention here I thought was kind of interesting is Microsoft. Now, we did this story for TradingView. And on TradingView, it's pretty interesting because Microsoft, the Wilder's relative strength on Microsoft was the lowest since I think in 9 years, since 2015. So basically, we had a more oversold condition on Monday in Microsoft than we had during COVID, right? Just think about that. And again, here you have a name of earnings beat, a little bit soft on Azure, but holding support. Interesting sort of thing. When you see things like this, it's not like Microsoft's had some incredibly, destructive news or something that was really, something that would, really undermine the story. It was not like CrowdStrike or Boeing or something. It was like whatever. So I think the thing is that when you see things that get an extreme sort of level of oversold, while at the same time the news is not of that nature, these are the sort of things when people can maybe say that something is mispriced, that there's too much fear in the market. And I think that's actually kind of the thing here that while there's relative strength and show you it's what we're trying to illustrate here with this chart study, thought it was kind of interesting. So wanted to mention that one as well. All right, there were a bunch of other interesting things that were popping up recently, and one of them I think has to be Palantir. I think this stock, I think we now have to see strong earnings. They're doing some kind of government deal with Microsoft as well, some kind of something with the Pentagon. You can look into it, but it was an interesting sort of narrative here. This is the stock you've been watching and waiting for a long time, and I think the thing is, here we are on pace for potentially, a record, probably the highest daily closing price in a while. Probably going back to look at this year, maybe back to sometime, back here in the first half of 2021 potentially. So this is, I think, an interesting sort of thing that has, really had its time to kind of chop here. And a name like Palantir here, I think, is something that's interesting. And I think one of the things that we have to kind of realize is that we are in an interesting market where we are seeing names that you don't think about do interesting things. And one of those are like Lumen Technology. I mean, this company had this incredible short squeeze. Now, a move like this is, you know, whatever. But I think the key thing is there are some strange and interesting turnarounds that are popping up. Another one of these was VF Corp. Now we wrote this article about significant call activity in VF Corp. Right here, this article, and basically people were rolling calls, and you can see there's two different, pretty significant trades, heavy options activity in this name. They own North Face and things like that. They have some short interest. They have a lot of debt. If you go over here to MT Main and you go to fundamentals, one of the key things we always do is you look at enterprise value to market cap. So if you look at this here, you can see the enterprise value is almost twice market cap. Now look at a name like Apple or something which has a strong balance sheet. Its enterprise value to market cap is equal, which basically means that they have very little net debt because your enterprise value is essentially market cap plus debt minus cash. So the thing is if you have a ton of debt, then basically your enterprise value is going to be significantly greater than your market cap. So the bigger this number is, then you look at a company that's highly leveraged like Ford or something, and you can see its enterprise value to market cap is almost 4 to 1. So you can just kind of see enterprise value to market cap as a pretty interesting tool. It's a custom indicator we created that, in my opinion, kind of synthesizes a lot of the principles of understanding corporate credit. There's a lot of ratios you can look at for corporate credit. And in my view, this is one that you don't need to be a credit guy with a CFA to really understand it. It's a pretty simple one that gives you a good benchmark across a lot of different things. The custom indicator we created, we share with you guys in the zip file, is one of the ways you can just see with TradeStation. You can create these indicators that can allow you to quickly jump into things. We don't care very much about credit around here, but the fact is that when it does matter, it can matter a lot. When a company gets beaten down and they have a lot of debt, they tend to get really hammered, and to people worry about bankruptcy and stuff, or at least people worry about them having to sell, assets or having to sell shares and raise capital. And then suddenly, when the tide turns, the rally can be pretty strong. And so I think that's what we're seeing in a name like VF Corp here. It's pretty interesting. I mean, if you look back historically, Carvana was one of the ones that we had, mentioned back when it was, trading, under $20. We were talking about this on Market Trends based on the credit profile they had. At that time, their enterprise and market cap was something really high. But the key thing is that when companies have these kind of turnarounds, they start selling assets, they start improving their profit margins, they start cutting costs. These things, it's like a narrative. It's like again and again. It's like watching a bad sitcom when it's like it's always the same plot again. Well, that's what these things tend to be. They tend to be everything is bad. People say they're going to go bankrupt. All these things sound terrible. And then suddenly you start to see the asset sale. You see the margins improve. You see the cost cuts. And then suddenly the turn happens. So it's interesting that we have been seeing this in different names. Mohawk is another one. This company, they do flooring. Here's a name that basically has been just left for dead. And they had a strong earnings report because cutting costs. It's pretty interesting to see these sort of things when revenue misses and earnings crush. Why? Because margins are turning. So interesting to just kind of mention this market is not only big tech stocks. It has these other sort of names. And you can use a lot of these tools that we're showing you now. Remember, I don't have it right here in front of me, but we have our 7 catalysts for stock movement, and credit is one of those. Business transformation is one of those. Margin is one of those. And these are some of the sort of like little buttons that management can press to kind of turn stocks around. And it's interesting that we are seeing names like this. Another one that popped up was 3M. We've talked about this name a fair bit. Again, they had a bunch of issues, and then they start right sizing their business. They do a spinoff. That's strategic action. It's another one we talk about. It's cited as one of our catalysts for stock movement. Now, today it's interesting that another name that popped up on that list was Under Armour. I just want to point this one out, a name that's also kind of been left for dead, but came back today with some interesting sort of results. And then some others that I don't know as well were Yeti. They make some kind of coolers or mugs or something, but this company had a strong earnings report. And, again, when you see a company that's been just kind of sitting here going nowhere, some of these are names that popped up as I was looking at movers and things. And these are some areas that people might want to be kind of looking at here. I mean, their enterprise value to market cap is not very high in a name like Yeti. It's a pretty expensive, when you look at let's do the PE ratio and things is on it. Um, I mean, I just want to mention that this is one that people that kind of popped up, and I want to just mention that we're at a spot here. We have seen some kind of turnarounds and stuff, and with earnings season is when we start to kind of find those. So I want to just kind of put a name like Yeti on people's radar. Shopify came back with a strong kind of report 2 days ago as well. So these are just some of the other things that are out there beyond just excuse me, the big technology names. All right, so pretty much near the end of my time here. I'm trying to keep these closer to 30 minutes, and I'm doing 30 minutes on Monday. So remember, if you go here, there is our state of the market on Monday. We look at the big sectors, and we look at the big indexes, mostly with weekly charts. And that is something that sometimes gives you another kind of view of things that can kind of help, especially to look for things like sector strength. The one thing I'll just mention is that we had looked at the XLI, and I'm just really watching this here because the industrials here, if we do have a non-recession, I mean, this is very interesting the way the price action has been just moving sideways in something like the industrials. So I want to just point that out. The financials and industrials are, two areas that have been doing that have been kind of outperforming, especially the financials. And if people start to say that there's not as much a recession risk with things next week like retail sales and CPI and stuff like that, I think you just have to remember that these are some other areas that actually, if you look at them, they have held their levels more than something like the Nasdaq. And if we do get that initial stage of a rebound, all the tech stocks and stuff they come jumping back. But then, do they go to new highs, or do they just go back to like kind of where they were? You look at something like Microsoft. Does Microsoft go to a new 52-week high? If the market rebounds, does it go to a new 52-week high, or does it just go part way up? But does the financials go to a new 52-week high because they are potentially closer to it? And I think that's kind of the thing is, as we start to shift from the correlated rebound to potentially a calmer market, if we do get that rebound, I think that might be the time when people actually start to think about things like, if that actually plays out that way, that could be the time when the financials, the small caps and stuff get back into focus. So I want to just kind of point that out. Remember, check out the volatility cycle today. We will be back on Monday. That's at 2 p.m. on Mondays. I mean, sorry, 3 p.m. on Mondays. So if you want to find the link there, I'll see you guys next week. Have a great weekend. Thank you much.